regarding a preference share capital 1 lakh 50 become 1 lakh. How much paid off? 50,000. There was a capital reserve of 20,000. Going to explain. General reserve 40 becomes 50. How much transfer from profit and loss account? 10,000. A piece of land has been sold out in 2009 and profit of sale has been credited to capital reserve. There are three activities are there. One is called operating activity. Number two, investing activity. Number three, financial activity. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to have Management Accounting, 6th semester, Unit 4, Session 2, in favor of cash flow statement. There are two statements in management account. One is called the fund flow and is the cash flow. As university is considered, they have removed the fund flow statement. They kept only cash flow statement. So cash flow statement as per accounting standard 7. So you have all the activities of the cash flow under inflow and outflow. All the activities has been divided into three groups. One is called operating activity. Number two is called investing activity. Number three is called financial activity. Which are the three activities are? One is called operating activity. Number two, investing activity. Number three, financial activity. First, you have to understand what are the things that will come under operating activity, what are the things that will come under investing activity. Regular activities called operating activities. Whereas the investing activity, purchase is cash outflow, sale is cash inflow. I'll repeat, purchase is cash outflow, sale is cash inflow. In the financial activity, issue of share is inflow, redemption of preference share is outflow. So it is coming in or going out. Coming in or going out, you have to understand. Coming in is inflow, going out is outflow. So one is cash we receive, one is cash paid. So what are the three activities are? One is operating activity. Number two, investing activity. Number three, financial activity. Now we'll move on to problem now. So they had given the balance sheet of 2 years, 2008 and 2009. So we have to bifurcate which are the fixed assets are, which are the current assets are. One is the goodwill is a fixed asset, building is a fixed asset, machinery is a fixed asset, investment will come here, whereas debtor is a current asset, stock is a current asset, BR is a current asset, leaving the cash in hand and cash at bank. Come back here, equity share capital, 3 lakh become 4 lakh, how much is inflow? 1 lakh. Regarding a preference share capital, 1 lakh 50 become 1 lakh, how much paid off? 50,000. There was a capital reserve of 20,000, I'm going to explain. General reserve 40 becomes 50. How much transfer from profit and loss account? 10,000. Then profit 30 become 48. Last year it was 30,000. This year 48. How much increase? 18,000. Creditor current liability, BP current liability is liability for expenses, current liability, tax provision is a current liability. Then we'll move on to that. A piece of land has been sold out in 2009 and profit on sale has been credited to capital reserve. This I'm going to explain. A machine has been sold for rupees 10,000. Written down value of the machine was 12,000. Division was 10,000. Is charged on plant and machinery. 3,000 dividend received on investment has been credited to investment account. An interim dividend 20,000 has been paid. We'll go with the ledger. Land and building. Opening balance how much? 2 lakh. See that? What's your opening balance? 2 lakh. End is 1,70,000. 2 lakh. End is 1,70,000. What's the balance? 30,000, which has been sold to 50,000. At a profit of 20,000, instead profit, they credited to capital reserve account. Actually, 2 lakh is 1,70,000. A piece of land, 20,000. Profit on sale has been credited to capital reserve. Here, 2 balance brought down 2 lakh. End figure 30,000. Here, it has been sold and the profit has been credited to capital reserve. So, 20,000, what's the balance? 30. If you want to get the profit, how much should be added? 20,000. 30 plus 20 means it has been sold for 50,000. I will repeat, 2 lakh opening, 1 lakh 70,000. There is a difference of 30,000. But here the problem says they get a profit of 20,000, which is credited to capital. So 30,000 to make the profit. So it should be sold for how much money? 30 plus 20, it should be sold for 50,000. 30 become 50,000. How much difference will come? 20, which is nothing but a profit. But credited to which account? Capital reserve account. I will repeat. 2 lakh at the beginning, by balance carried in at the end is 1 lakh 70,000. What's the difference? 30,000. So there is a profit of 30,000. There is a profit which has been credited to capital reserve account. Your capital reserve is 20,000. So 30,000 to get the profit should be sold back 50,000. If we sold for 50,000, then there is a profit of 20,000 which has been credited to capital reserve. Hope you understand. Then we'll go back to machinery. 2 balance brought down 80,000. Come back. The machinery sold for 10. The written down value of the machine was 12,000. Depreciation is 10,000. It was said a machine has been sold for 10,000. Written down value is 12. So 10,000 has been sold for, written down value is 12,000. It has been sold for 10,000 at a loss of 2,000. 10,000. There was a loss of 2,000. At the end, how much you got? 20,000. Difference is 1,42,000, which is considered as purchases. Debit side difference purchases, credit side difference sale. Then we'll go to investment account. At the beginning, you have got 20,000. How much you received during the year? 3,000. End of the year, 30. 30 plus 3, 33,000. Means how much you have got a balancing purchases? 13,000 has been purchased. Debit side purchases, credit side sale. We'll move on to next one. So this is the format which we have to learn. Very simply format, but learn properly. First, cash flow from operating activity. I told there are 3 activities are there. One is called operating activity. Number 2, investing activity. Number 3, financial activity. We'll go with operating activity. Difference in profit, closing profit minus opening profit. 48 minus 30 is 18,000. Add non-cash item. One is your depreciation, loss on sale of machinery, preliminary expenses written now, then goodwill written now. 1 lakh minus 8 is 20,000. Transfer to general reserve, 40 become 50,000. How much transfer? 10,000. Proposed dividend is 50,000. Interim dividend is 20,000. Provision for tax 50. We mean to say that the real profit was 1,85,000 before working capital. Add back to know the real profit. So real profit becomes 1,85,000. Now changes. Add. This format. Decrease in current asset, increase in current liability except cash, increase in creditor. 47 minus 25 becomes 22,000. Increase in liability for expenses, 36,000 minus 30,000. There's a difference of 6,000. Then less increase in current asset, opposite to this, and decrease in current liability except cash, increase in debtor, 1,70,000 means 1,30,000. Increase in stock, 1,977,000, 32,000. Increase in BR, 10,000. Decrease in BP, 4,000. It becomes 1,37,000. Minus income tax paid, 40,000. So it will come 97,000. Then cash flow from investing activity. Land sold as per the working note, 50,000. Machinery sold, 10,000. Purchase of machinery, 1,42,000 as per working note. Investment purchase, 13,000. So there's a negative figure of 95,000. It's a net investing activity. Then we'll go to financial activity. Issued capital, 3 lakh become 4 lakh. How much issued? 1 lakh. You have dividend received. How much money? 3,000. Redemption of preference share, 1,50,000. End figure is 1 lakh. How much paid off? 50,000. Dividend paid during the year 42,000. Interim dividend paid 20,000. It becomes 9,000. If it add all the three activities, a negative figure of 7,000 will come. Then add back opening cash in hand, cash at bank, 25,000. 7,000 minus plus 25,000. Your answer is 18,000 closing balance. This balance you have to arrive. 7,000 minus 7,000 plus 25,000 is this figure you have to arrive in examination. So if you arrive, what all the three activities are correct. Which are the three activities are? Operating activity, investing activity, financial activities. All the three activities should be added. For that, opening cash in hand and cash at bank should be added. The difference is called closing cash in hand, closing cash at bank. So these activities should be very, very careful. This I will explain once again. Here, see that 2 lakh is there. End figure is how much? 1,70,000. There's a difference of 30,000. Whatever the profit earned will be transferred to capital reserve. How much capital reserve as per the balance sheet? 20,000 this says. So to get the 20,000 profit, you sold for 30,000 for 50,000. This is 30,000 plus 20,000. It has been sold for 50,000 to arrive the profit of 20,000. Balance carried 1,70,000. This you have to learn. You understand? Which are the three activities? Once again, one is called operating activity. Number two, investing activity. Number three, financial activity. And all three activities had opening cash in hand, opening cash at bank. Then the end result should be equal to cash in hand and cash at bank. If they are tallied with the closing balance, whatever you done is correct. Hope you understand. We'll have one more session in the next session. We'll have one more problem about cash flow. So this will be helpful from the examination point of view. Hope you understand. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.